You know, the most famous piece of advice that Warren Buffett ever gave was, be fearful when others are greedy, and be greedy when others are fearful. It's quite a profound statement, don't you think? You've got to be prepared when you buy stock. You've got to be prepared for it to go down 50% or more and be comfortable with it. I find that interesting from someone who just recently sold $850 million worth of Bank of America stock. You know, Warren Buffett raised eyebrows when he halved his Apple stock in June. Cut it in half, got rid of half of it, which took his cash pile up to just shy of $300 billion in June. And apparently Warren is making more moves. With office vacancy rates remaining at record highs, and they continue to outpace occupied spaces, the outlook suggests that these vacancy rates will further erode the negative impacts on banks, which probably explains why Warren dumped $850 million worth of his Bank of America stock. So his cash pile is growing, and add that 850 on top of the nearly $300 billion he had before, he's got to be inching right close to $400 billion in cash. He's preparing. Because with all of these commercial loans getting ready to default, because many of them will mature in 2025, and many of them will not be able to refinance, Bank of America, who holds a substantial amount of commercial paper, has a lot to lose. And it won't be just Bank of America. There'll be lots of banks that will experience the pain of non-performing commercial loans. And that downturn will be extensive, and it will be a domino effect. And while I don't want to see that, I certainly don't look forward to it, because I think it will be used as a tool from the government to usher in other things like digital currency. A stock market correction, however, wouldn't hurt my feelings. It's probably not the consensus for a lot, but a market correction has been on my radar for quite a while. I'm surprised it hasn't happened yet, but I think there's a lot of reason why it hasn't happened. I mean, when you have things like fake job numbers, all the job numbers get revised down. Like for the past more than a year, the government just revises them down, doesn't report job numbers accurately. It's only a matter of time before the bottom falls out. If you're getting close to retirement, that's something you should be looking at very carefully. And I have to ask, have you thought about it? Have you thought about the market making a correction? And if so, how much? It's going to be 20%, 30%, 40%. There are economists out there that have predicted over a 50% correction.
Okay. So that's where we're at. This thing has got to blow. It's showing signs of topping here. It's having a hard time, just barely making new highs. But we've got to see a crash of about 40% to say, oh, okay, finally the bubble's let off its steam. And once it gets that much momentum, I think it's hard to stop, and then we'll go from there. I'm just telling people, this is not the time to hold out for a little more gains. We've already gotten the longest bubble, the greatest gift. Everybody's house has gone up double or more what it should be worth. Everybody's stock portfolio has gone up double or triple what it should be worth because of all this stimulus. But if you have to pay the piper, which I say and history shows after bubbles, every major bubble is burst. And bubbles are not followed by recessions. They're followed by depressions. When you hear Great Depression or the Long Depression of 1873 to 96, those followed major bubbles.
Any bets? You can tell me what you think in the comments section below. I do like reading your comments. And I wonder how the housing market will fare and a big turn down. I mean, it slowed things down in '08. But then again, the banking system pretty much caused that downturn. And if you are watching the market, I'm sure you can see the volatility of it all. First week in September, we're down 1,000 points. Curious to see what the second week will bring. And of course, that was due to poor job numbers. And speaking of job numbers, I mean, they're continually revised down, but the jobs that we are getting are not full-time jobs. They're part-time jobs. And people are having to work 2 part-time jobs in order to make ends meet because they can't find a full-time job. And now there's a very disturbing trend. And this one really gets my goat. Most Americans have lost their jobs to illegal immigrants.
Well, Brian, unfortunately, it means the consumer is going to continue to be extremely strapped going forward because they are losing their full-time jobs and having to replace them with at least one, but typically more than one, part-time jobs. And sadly, this last month is not simply an isolated incident. It's part of a broader, longer trend where we have been losing these full-time jobs, over 1 million in the last year, and replacing them entirely with part-time ones.
In that vein, what do you make of some of the data points we're hearing that all of the job gains are going to foreign-born workers, none of them to native-born Americans?
Well, Taylor, on net balance, that's certainly true. Now, I do want to point out something about the numbers that were on the screen earlier. If you're only looking at the change from July to August, we have to keep in mind this is not a seasonally adjusted data set. In other words, every August, you always see a plunge in native-born employment. That's not unusual. Now, was this one particularly large? Yes, that is true. I think the more worrying part is, again, like the part-time versus full-time employment, this is part of a broader, longer trend where native-born Americans have made literally no progress in terms of employment in the last 5 years. In other words, there are fewer native-born Americans employed today than before the pandemic. All of the job gains on net have gone to foreign-born workers. And by the way, the BLS admits on their website that that category includes an unknown number of illegal aliens.
Now, I could go off on a complete tangent on the border and the illegal immigration thing because it's wrong and Americans are suffering because of it. And obviously, now they're losing their jobs. We got a new name for it. It's called the Great Replacement. How does that make you feel as a native-born American? What I find most interesting is the fact that the government has abandoned Americans. We're the taxpayers. We're the ones paying to feed and house those people. What's going to happen when we stop? But I digress. Let's go back to the stock market because it all ties in together. In addition to the job numbers being very low, which was why we lost 1,000 points in the stock market last week, there's another little thing, another little phenomena that's happened. It's that yield curve thing. We've had an inverted yield curve for 2 years. And guess what, kiddies? It just flipped. For the first time since July 1st of 2022, the yield curve is now uninverted. The yield on the 2-year Treasury note came in at 3.65%, while the 10-year came in at 3.71%. With the 10-year finally higher than the 2-year, it snaps the longest inversion on record of 545 trading days. So, I don't want to have to give you a lesson on what a yield curve is, but long-term rates should always be higher. You should get paid more money for a long-term investment. You get paid less on short-term investment. Well, for the past 2 years, it's been the other way around. They're giving you money, a higher amount of interest on the short-term Treasury bonds. Well, that's over. It's now flipped. So those great yields you were getting if you were buying Treasury bonds every 30 days or every 90 days. I was like flipping them every 90 days. Those rates aren't going to be that great anymore. I haven't looked today to see what they are. But when the yield curve uninverts, you know what that means, don't you? The big R word. The R word that they say we're not in, that we really have been for the past 6 months. But historically, like every time, that type of historically, when you have an inverted yield curve and it uninverts, we go into a recession. So that's where we're at. But it's better than the D word. So how would a recession affect you? Are you a business owner? Are you a realtor? What is your job? Normally during a recession, if you're a business owner, you make less money. Some businesses go out of business. The consumer is already pulling back. And in a recessionary period, they'll probably pull back even further. It's going to be very interesting. I find the timing on this very interesting. A couple months, not even a couple months, till we have the election. I always said once the election happens, that's when the other shoe will drop. And we're getting ready to have that happen. When you look at the stock market and you look at what people like Warren Buffett do, it's a telltale sign of what's about to happen. The man has sold a lot of his positions in a lot of different things, and he's stockpiling massive amounts of cash in order to capitalize on a downturn. Hopefully, you'll be able to do the same. And make sure to comment. I'd love to know how you feel about all those jobs and who's getting them. And if you'd like to learn more about Warren Buffett, I'll pop that video at the end. Don't forget to like, subscribe, and share. And I hope I see you here again. Take care.